Hi, thanks for joining us on Real Estate Insiders. I'm Danny Poulos from the Elite Lending Team at FEMBI. Joining us now is Jodie Harris, also from the Elite Lending Team at FEMBI, and she's going to be talking about reverse mortgages. So I know it's a surprise. You're used to hearing it from old retired actors on TV, so it's going to be nicer to talk to Jodie about it. So Jodie, thanks for coming in today. Tell everybody a little bit about who are you, what you do, and how long you've been doing it.
Hi, I'm Jodie Harris. I work with Danny at FEMBI Mortgage in Jupiter. Just been doing it the last couple of years. I do reverse mortgages, but I also do regular mortgages.
Right, that's something I want to get to about looking at all the options when you talk about reverse mortgages. So let's start out and explain what a reverse mortgage is.
Okay, a reverse mortgage is where instead of you're paying a monthly payment and gaining equity in your home, you're basically either taking equity out of your home or you're paying a one-time payment and then interest accrues and you make no other payments.
Right, so that's the feature that everybody is pretty much familiar with, is when you have a reverse mortgage, the difference is you don't make any payments. There's no mortgage payment, right?
Right.
Do you still have expenses that you need to pay every month with regards to the mortgage, other than the mortgage payment?
Yeah, as far as the home's concerned, you're still responsible for paying your taxes and your insurance.
Okay, so for those that think they get a reverse mortgage and nothing out of pocket ever, that's a misconception. You still have to pay your taxes, and of course you need to keep your house
insured,
and you can shop for that on your own.
Yeah, you can choose your own, yeah.
Okay, so again, forward mortgage means you're paying money. Reverse mortgage, you don't pay any money.
Right.
So who can get, and who would it appeal to, who can get a reverse mortgage?
Anybody who's 62 or over. And if it's a couple, the youngest one has to be 62.
All right, so you've got a 62-year-old woman married to a 45-year-old man.
Not going to happen.
Not going to happen.
No, they both need to be 62.
Both over 62 before you, or the person just buying the house needs to be over 62?
No, if it's a couple, they both have to be over 62.
Okay, so if they're married, both ages automatically count. Mm-hmm. How about their credit?
Their credit score is not an issue. That's not something that we look at. We do pull credit to see how much monthly debt they have.
Okay, so they don't have to have. We all know how hard it is, or more difficult it is, to qualify for a conventional mortgage than it was 5 or 6 years ago.
Right.
So I guess we would run into people now who might have been candidates for a conventional mortgage, but their credit isn't good enough for it right now. If they're over
correct.
62 years old,
then they can look at the reverse mortgage.
All right. So, but you're still going to look at their credit report. You want to?
Yes.
Okay. That's to see
their monthly obligations.
All right. I guess the reason you'd be concerned with their monthly obligations is because they've got to at least be able to afford those other expenses.
Right. They need to be able to afford their monthly obligations plus 1/12 of their taxes and insurance on the property.
Okay. So it's not just a blank check, here you go, no payments, nothing. They're going to take a look at the credit, but the credit score is not going to be
It's not going to be
the payment history is not going to be important.
Yeah.
So if you got lousy credit, it still may be okay.
Right, as long as if there is a foreclosure or a bankruptcy, they still have to abide by the FHA waiting periods.
Okay, so that's an important point. The reverse mortgage is actually an FHA product. Mm-hmm. So when you see those retired actors on TV saying government product, government loans, all they mean is that it's an FHA loan. It's a loan done through FHA.
That's correct.
Okay. We've got people in that situation, obviously, that you just mentioned. Someone who's had maybe a short sale on their last house, bankruptcy, foreclosure. So again, they just need to be aware, and they would actually speak to you and find out what the FHA waiting period is for after a short sale or after foreclosure before they become eligible.
Or after bankruptcy, yeah.
And I just thought of this now, really, because we're going to talk about using it for refis and also using it for purchases. When we talk about waiting periods, we're just talking about purchases, or is that also the case on refinances?
Well, with refinancing, chances are they have full equity in their home, and so the foreclosure and short sale most likely wouldn't come into play unless
Right.
they foreclosed on a second home. So it would be less likely on a refi than it would be on a
Right.
purchase.
So that's really what I want to get to. So when you're talking about refinance, it's sort of a different animal and different concerns. So let's break it down into both.
Okay.
I own my house free and clear. Everybody that lives in the house is the husband and wife are both over 62 years old. And I want to get some money out. Number one, how much money can I get?
The percentage of equity that you can get from the home is determined by the age of the youngest borrower.
Okay.
And it's, there's calculations that you do. You send the age and the information about the home, and then we get a quote saying the percentage of equity that can be taken out. It's, depending on the age, maybe 50-55%.
Okay, so if I've got a house for $250,000 appraised value, chances are I'm going to be somewhere around $125,000 that I can access and not have to make mortgage payments on.
Correct.
I mean, that's the bottom line what we're looking at.
Right, and it can be taken in a lump sum, it can be taken as a line of credit, and it can be taken with the homeowner receiving monthly payments.
All right, so let's break those down. Lump sum, just here's your check, and then you're going to pay, you're being charged interest on that amount, but you're not making a payment, obviously, it's just affecting the balance that you eventually owe. Number two would be as a line of credit, and then you're only paying interest on what you borrow?
Yeah, you're paying interest on what you borrow. The first amount that you set aside, they look at your obligations and they come up with a percentage of the amount that you're allowed to borrow that you can take out. The only thing with that is that whatever you agree that you're going to take out for your first payment, you have to wait a full year before you can make another withdrawal.
On the line of credit?
On the line of credit.
All right, so decide what you're going to need for the first 12 months and take it.
Right, but you got to make sure that it's going to last you the first 12 months.
Right.
And then the third option is if you want to do where you receive monthly payments.
All right, so it actually supplements your income on a monthly basis. You could, and can you combine those things in any way?
No.
So you have to decide, how you want to take the money.
way you want to do it.
So if we look at the typical retired person, they're going to know they have all this equity in their house. They know what their Social Security is. They know what if they have a pension, what that is. And if they want to add on $1,000 a month to that, whatever it is, the equity in the house, they can add that on for the reverse mortgage and not be making mortgage payments.
Making mortgage payments. So they save the payment and they could be receiving additional income.
And it doesn't, when I think about it, you think about someone who really needs the money. It doesn't necessarily have to be someone that needs the money. It's not an emergency when they get the reverse mortgage.
It could be somebody that's choosing to take their assets and invest them and then utilize their home as a source of income, maybe at a lower rate than what they're getting a return on their investments.
Or you were telling me before, someone that might just want to travel and enjoy themselves.
Yeah.
And not worry about the money they had coming in. That'll stay the same, but that can be their budget for just
for enjoying the rest of their life. Yeah, doing the things that they really wanted to do in retirement that they didn't think they could do.
Awesome. And that's the refi person. So now the purchase person, I know a lot of people don't even know about this, that you can buy a house with a reverse mortgage.
Right.
So they've got a minimum amount, I guess they would have to put down, right?
Right. And that's also based on the age of the youngest borrower, and that probably between 35% and 50% is what they'd be putting down.
So I guess the typical borrower there would be someone who's probably, because they're that age, maybe they're retiring and they sold the previous residence. Mm-hmm. And so they're up
and instead of taking all of the equity that they had from the house that they sold, they're taking a portion of it, putting it down, and the rest of the equity they can use to either live on or invest or whatever they want to do. And then they don't have to worry about a monthly payment. So once they close on the loan, they don't make another monthly mortgage and an interest payment.
So that person was probably somebody that was either thinking about paying cash, right? Putting all their money into the house,
right?
Or qualifying for a conventional loan. So someone that's retiring, they're coming down from up north, they sold their house, instead of just assuming they have to take all that money and buy a house, they should maybe be looking into a reverse mortgage. When's it due?
It's due when the youngest or the last borrower leaves the home, whether they pass away or decide to sell it or move.
All right, so it's got to be a primary residence
Primary residence.
for as long as you're in there. So I get the typical situation would be maybe the borrowers end up moving into assisted living, or they end up maybe downsizing into something even smaller.
They could do that.
At that point, the property has to be sold, correct?
The loan needs to be paid off.
Okay.
It depends if they wanted to keep the property or not, but if they're moving out of it as their primary residence, then the loan needs to be paid off, which is usually selling the house.
Well, we were talking about them staying liquid, so they may just have the funds to pay it off and keep the house in the family anyway, unless the
Right.
family wanted to buy it.
Right.
So the last thing I want to cover is, again, people are so used to listening to advertisements for reverse mortgages, and it's, call for this free CD and tell them all about reverse mortgages. And those companies just do reverse mortgages. And because we're in the business of all kind of mortgages, I think of that saying, if all you have is a hammer, everything looks like a nail.
Right.
Well, it may not be the case. With a reverse mortgage, would you compare it to conventional financing?
Well, as we do with every client that we talk to, we look at their situation and come up with the product that is best for their situation and their needs. So for some people, it's a great option, but it's not the option for everybody.
Yeah, so they may even be thinking, they may be listening to this now and saying, boy, that would be the perfect thing for me. But when they sit with someone like yourself, you're not just going to be talking about reverse mortgages. Here's what the reverse mortgage looks like, and here's how it compares to a conventional mortgage if that option is available, so you can make a smart decision about it instead of, reverse mortgages for me.
Right.
I really do think that's important as people look into this. So tell everybody how they can reach you for more information on not just reverse mortgages, but conventional mortgages and VA mortgages and FHA mortgages and everything else you do.
Yeah. My name's Jodie Harris with FEMBI Mortgage. My number is 561-307-3233, and we are on South Central Boulevard in Jupiter, Florida at 250 South Central. So give me a call.
Thanks for coming in, Jodie. Great information.
Hi.